Welcome to today's trading tutorial, where we'll delve into the art of trading with the Protected Highs and Lows TFO indicator. Protected Highs and Lows TFO indicator presents an alternative approach to identifying market structure. Now, to find the indicator, search for the keyword Protected Highs and Lows TFO. Select the one by Tradeforopp. Before we dive into trading strategies, let's check out these indicator settings on the TradingView platform. Here's how to do it. Place your mouse on the indicator and right-click. Navigate to select the Settings option. Under the Settings section, the Trend Candles option allows users to easily visualize the current state of the market structure with bullish and bearish colors. Users may also show BOS and MSS labels if desired. Show Protected Highs and Lows will annotate the protected highs and lows. Just note that the labels themselves are plotted in the past due to the lookback function required to identify them. Lastly, the Show Protected Trail option will draw a line to essentially indicate a trailing stop-like line to denote the most recent protected low if bullish or protected high if bearish. There is the pivot strength set to 1. The trend candles by default are green and red. By default, the show structure label is MSS. Change to break of structure BOS. In general, the term break of structure BOS could refer to a technical analysis concept where the price of an asset breaks through a key level of support or resistance on a price chart. A break of structure might signal a potential shift in the market trend or momentum, and traders may use such events to make trading decisions. Show protected highs and lows are red and blue. Show protected trail is 2. Other settings can be modified by traders to suit their trading styles. When quantifying market structure, it is common to use fractal highs and lows to identify significant swing pivots. When the price closes through these pivots, we may identify a market structure shift, MSS, for reversals, or a break of structure, BOS, for continuations. The main difference with this protected logic is in how we determine the pivots levels that are utilized to determine a valid MSS or BOS. Nonetheless, the significance of our swing pivots is still governed by the input pivot strength parameter, which requires valid swing pivots to be compared to this many bars to the left and right of them. This is an optional parameter as it is traditionally set to 1 by default. When identifying a BOS, when the price closes below a valid swing low, we look back from the current bar to find the highest high that was made in that range. This becomes our protected high. Similarly, when the price closes above a valid swing high, we look back from the current bar to find the lowest low that was made in that range, which then becomes our protected low. Note these valid highs and lows are the first swing pivots created after an MSS BOS. For example, when the price makes a bullish BOS MSS and then trades away, a swing high is formed. This first swing high is what needs to be traded through to see a valid BOS. When identifying an MSS, if the current trend is bearish and we're looking for a bullish reversal, we would need the price to close above the most recent protected high. When this happens, we still look back to find the lowest low that was created in that range and make that our new protected low. Likewise, when looking for a bearish reversal, the price would need to close below the most recent protected low, which would then give us a new protected high as a result, the highest point in that range. How can these indicators be used to detect buy signals in the market? To generate a bullish trading strategy setup based on the reversal of a downtrend to an uptrend, Step 1. Look for the candlestick on the price chart to turn from red to green. Step 2. Look for the price to trade into the green dotted line of the protected highs, BOS. Step 3. Confirm a surge in bullish volume to close above the green dotted line of the protected highs, BOS. Step 4. Wait for the Show Protected blue arrow to pop up underneath the Show Protected trail blue line. Step 5. Consider entering a long position with appropriate risk management. For the continuation of a bullish trend, Step 1. Wait for the price to make a bearish retracement. Step 2. Wait for the price to break out of the next BOS in the uptrend. Step 3. Execute a long position. Target the minimum 2 risk-to-reward ratio or the next key resistance level on the price chart. Alternatively, close long trade once the price closes below the show-protected trail blue line. How can these indicators be used to detect bearish signals in the market? To generate a bearish trading strategy setup based on the reversal of an uptrend to a downtrend, Step 1. Look for the candlestick on the price chart to turn from green to red. Step 2. Look for the price to trade into the red dotted line of the protected lows, BOS. Step 3. Confirm a surge in bearish volume to close below the red dotted line of the protected lows, BOS. Step 4. Wait for the show protected red arrow to pop up above the show protected trail red line. Step 5. Consider entering a short position with appropriate risk management. For the continuation of a bearish trend, Step 1. Wait for the price to make a bullish retracement. Step 2. Wait for the price to break out of the next BOS in the downtrend. Step 3. Execute a short position. Target the minimum 2 risk-to-reward ratio or the next key support level on the price chart. Alternatively, close short trade once the price closes above the show-protected trail red line. Remember that trading always involves risk, and no indicator or strategy guarantees success. To increase the winning trading result using the protected highs and lows TFO indicator, it's advisable to combine it with another technical trading indicator like moving averages and technical key level structures from the high time frame.